TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Friday morning. We've got a jobs report coming out in, about 20, 25 minutes. That's going to be pretty damning or joyous for the S&P rally yesterday. I've got crude oil up right now. And as promised, we do have, and let me get this navigator out of the way here a little bit. As promised, we have a new profile that's appeared. We were talking about this yesterday with the orange bar situation and the inflection points on crude oil. And, who knows? I was laughing with a couple of guys yesterday during that rally, and we were, it's like, just the fact that crude oil wasn't going down possibly was the joyous occasion for the U.S. stock market. And we talked about a new demand area popping up. Not that it was rallying hard, but again, you got 50.39 up top here, and you got 47.72 down below. So that's the new kind of rattle around so-called fair auction, so-called balanced area, if you want to call it. A couple of different things that I usually call it there. And as we look at the PSC, we're going to kind of ignore that completely right now. But, again, things on their lows can go lower, and crude oil definitely has been an exemplary feature to that statement. And as we look at, the situation down below, we don't see a lot of divergent situations going on here with other indicators, namely the navigator indicator. And I can pull up a couple others if you guys want to get into an indicator discussion sometime. But the cruel facts of the matter are, you got a selling point at 50.39, in my opinion, still, and you've got in a range-bound situation, a buy point at 47.72. I'm not really a big fan of continued buying breakouts on the downside right now. So looking to see if this can kind of have some basing action. Actually, this is really, really kind of going a long ways in a short amount of time. And we want to kind of look at crude oil maybe as hopefully trying to find some support here, actually, at this stage. I haven't been bullish on crude oil, but I'm not as bearish as I was. So that's the situation there. We've got to take a look also. Want to take a look at some grains here. We've got let me get down to the grains. And the reason we're looking at this is we've got on beans, these are March beans. I've been talking to some guys. I love to trade grains, and I love to kind of mix in some fundamental information every once in a while with the grains, it's, trading and the levels, so to speak. But there's a pretty big report on Monday or Sunday night, actually, on some, bean supplies, production, mixing in a little bit of weather situation forecast. You guys can look into that report. These guys are telling me that, they think the good news is already baked in the cake on this one. If there's a hint of bad news, we could actually start seeing by the expiration of the March options, which are in late or February 20th, 21, somewhere in there this coming month. They're thinking, again, they're thinking we could see easily $9.50 or $9 for a bushel of beans. And I'm looking at the technicals going, well, guys, I don't see that yet. But again, reports can drive markets, any way they want to. And they're a little bit more fundamentally bearish on this at this stage. And if you're going to play that game, make sure you put your stops in, folks. But as we look at this, even on a long-term basis, I'm not a big fan of, that's going against the technicals for sure. So take that for what it's worth. But they're kind of bracing for a possible downdraft in this, and they're buying a ton of puts. So on the situation with wheat, the guys that I talk to are primarily bean and corn guys. Wheat's a little bit different animal, but we talked about looking at wheat recently around 580. Let's see, pull this up. 583. There's the 583 area. That was the previous unfair low. And then we got this 581 sitting here. And wheat, we caught a little bit of a bounce there. We got back above $6 a bushel, but then we kind of closed below all this support area down here. And now we got to look at it as resistance because we closed below and kind of ratcheted back up into that inflection point. Wheat, again, this was kind of Custer's last stance for me on this particular product. And as we look at moving forward, this is kind of okay to be short, not okay to be not okay to be long, not okay to be long. I mean, this was the kind of the prevailing trend up, if you will, and then we caught this bid here, and then all bets are off below. So as we look at wheat, it's not probably a ripe situation to be looking at wheat from the long side again until we get down into this 536 area if we're going to go that low. So you got support at 536, and you've got actually breakout possibilities above 581, 583 again. So right now we're kind of in no man's land. Just as we were in that same scenario up in the fair auction on the daily up here, and we said kind of stay away from this until we get down into this area. Caught a little bit of a trade for a couple of days, but now it's not, you don't have the leverage on your side on wheat right now. Either way, actually. Here's corn. Excuse me. Excuse me. I was hoping we would get back up in here and shoot for 417 again. That didn't happen. Just like wheat, we've kind of broken down the past couple of days below profiles. And this is something, again, that we're sitting within the fair auction on the new weekly bar here, and we're below unfair highs in the long-term fair auction, below $4 a bushel, and we're below profiles on the daily. So this is kind of a wait and see for the long side too right now, and I'm not a big fan of going short corn. So I'm just kind of waiting patiently on corn to see what's going to develop here. Gold, got to go through the usual suspects before we get into some new sector analysis today. Gold, man, it's kind of disheartening for me. We just can't get through that 1218, 1219 area, and we're staying above the 1200 area. So we're kind of in this, I'm still in a longish mode here above 1200 with stops down below, just as I've done, religiously since middle of November, and gotten stopped out a little bit here and been able to take a chance of take advantage of a couple of situations that have happened above 1200, but right now just kind of patiently waiting, trying to keep the long hat on and stops below 1200 for that type of trade. And I've got my stops a little bit below 1200 actually to give it a little bit of room. And that's the situation on gold, crude, some grains, and update this. Let me change this. And we're going to take a look at natural gas. Okay, February contract. Wait a minute. Yep, February contract here. 3089, still the big number. Are we in? Let me see here. Hold on. Let me just check something. I had my page not saved the other day, and some things changed. Hold on, guys. Sorry. Yeah. Okay, so February natural gas, we talked about that 3089 area. Still sitting below there in the two-handle situation on natural gas now. Really don't see a lot of good things happening here. We tried to, pick a battle the other day, and this is our daily inflection points here, and we got above. But again, we never closed above this 3089, and that's kind of the powerful inflection point, move above, move below pattern that you want to see, and we're just still languishing down here. So you want to see a close up at least into the fair auction to start getting any hints of long here on natural gas. I got a question about the the S&Ps here. Let me pull those up. Haven't gotten into this one. Okay, so what we were talking about, I'm going to try to answer that here. We've got a new box that's appeared on the daily. So, this has been a little, let me just pull up our scanner here really quick. Let's get this in the right framework here. Here we go. So as you can see, our weekly breadth, the long-term positive breadth, it's never wavered and changed to negative at all. And the long-term trend's been up, and we haven't broken down technically below profiles on the daily or weekly. And we've been, talking about that. But the daily breadth had turned negative. And let me just go through the history here so we can try to move forward with the right attitude. As we were writing here, the daily breadth started turning negative a little bit. And when we crossed over 2027, then that was the technical damage along with the breadth being negative. That, you can't try to buy the dip at 2027. The breadth's negative. I was actually trying to buy the dip at 2027, but got stopped out because the breadth had changed to negative, and then all bets are off for a while. And you've got to pay attention to what's going on the intermediate breadth, and then trading below an inflection point. We closed below. We didn't get back up high enough there. That next day, I was a little pissed because I think we only reached, like we talked about, 2023.50, and that was around 2026 and some change. And I actually had an order that didn't get filled on the short side and started crying that night. But then we obviously rallied back up. And in a 24-hour span, literally, I think we rallied like 75 S&Ps. It was nuts. And I tried to, short this. The breadth was still actually, it was right at the balance point around there, and I took a shot. Excuse me. It's like 18 degrees here in North Carolina. I don't think I'm getting sick. Here we go. As we crossed above here, I had to get stopped out of that. So, again, lose a little, make a lot. But as we crossed here, the breadths on both of these time frames turned positive. The daily turned positive. The 240s and 60s were already positive. And the weeklies never wavered from being positive in the long term. So as we looked at the daily, the weekly, I was, either hoping that we would get some shorts off 2027 or actually get back down into the 68.72 area. That never happened. This has been a little bit of a churning experience for me, actually. So what do you do now? You got a jobs report coming out. You got new inflection points. You got a POC that's lining up with the former 2027. So, right now you don't have any long-term or intermediate-term leverage here. And we're going to talk a little bit more about this when we come back, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book,
Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan has just announced a live workshop that he'll be hosting Tuesday, December 9th, that only subscribers will gain access to. You can attend with no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, welcome back to the show. I've got 5 minutes before this report is coming out, the jobs report. I wanted to take a look at the XLF. We're going to get into some individual stocks within this sector when we come back, and this stock's obviously having some issues with the low rate environment that continues to move forward. When they were thinking that these bank stocks start making hay when the yield curve changes in their favor, and that means when we'll get into that when we come back. But I also want to just take a look at the S&Ps again, and let you know some major inflection points again. If you haven't been watching, just to point them out, we got a new box appearing. We've got this 2027 area sitting below. We're about 20 points higher than that right now. This is the intermediate. And on the weekly, on the long term, we've got nothing sitting there on the 240. I think this is what people are interested in more than likely. And the levels here, which are on the scanner, if you've got the scanner, are 2047 up top. Down below, and 2053.50 up top. We're kind of sitting on support right now. I'm going to suggest, always on a report like this is going to be pretty impacting, just to sit tight, let it come out. We could actually sell off. This has been a huge run. The market may, there may be, a less than 50% chance that we're going to move higher, even on good news, because we've had such a powerful move lately. So you're going to have some almost outstanding news on the bullish side for the S&Ps for this to probably move higher. And then you've got a you may have a cap up here at 2058.50. Excuse me. That's the unfair high. 2058.50 down below, 2047 down below. I'm sorry, had to restate that. And what I went through recently before this report was, we always don't want to beat our chest when we're right. Sometimes, we have to take our medicine. I took a little medicine there around 2027. My partner actually in Spain, Eddie, has actually been playing this from the long side down here because of the long-term breadths continuing to stay positive. But I was a little bit more shorter time frame oriented, and was trading a little bit more around these inflection points here. So I tried to buy something there. I got stopped out and was waiting for the retracement. Never happened. Was hoping that we'd have some kind of close below retest. Breadth was positive on both levels at this stage, so this wasn't something to really look at from the short side. And as we had breadth positive, we actually never even got a kind of close above and retest. As you can see, there's that general 2025, 2027 area. So we powered through all that mess down below at 2025, 2027, and never really came back and totally retested that area. The lowest we got after we moved above was 2030, and then we just were off to the races. So I missed a couple of probably opportunities on some violent moves here, but that's the way it goes. And what we do, the reason I'm saying all this is because you're never going to catch every big move. If you think that you're supposed to catch all these big moves, the main thing about trading is, in my opinion, is playing defense and not taking the major heat. So again, that the lose a little, make a lot. Be patient. You keep hanging in there. As I tell myself when I get nicked up every once in a while, play the odds. Make sure your risk reward scenarios are in your favor. Let's try to risk one to make 4 or 5. And your time frames that you're looking at, try not to deviate from your game plan. I mean, those are the things that you start trying to make things back, and you're looking at seeing things that aren't there. That's just some information that is always good for anybody, including myself. I have to tell myself that every once in a while. And let's just take a look again at the levels in the S&P 2047 and 2058.50 up top. Those are on our scanner. I've got to look at the notes here and the bonds really quick because obviously these are going to be affected. And here's the levels here right before this report. And again, these things have been on fire. New box appearing 128.15 up top on the 10-year and 127.17 down below. Those are the numbers on the 10-year. Probably wait patiently for those to come out too. And you've got 127.23 sitting down below on the major weekly. So you've got 127.23 and 128.15 up top. And on the 240s, you're going to probably just ignore that on the 10-year. Let's take a look at the 30-year. We got about 20 seconds here before we go to break. And this is real-time quotes. This is our daily. You've got support down here around 146. I'd pay attention to that. You've got some 240. Yeah, there's nothing up top. I mean, it's, I think this is the buy the support game still in the treasuries. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Obviously, jobs report. Market somewhat liked it. Low unemployment rate again. Bonds and notes go up. They go sideways or they go up. That's the theme of the U.S. Treasury market, and there's a lot of reasons for that. Here's those 2047 and 2058 levels. If you're watching the screen right now, the scanner's got all those. And if you look across, we're now in the middle of a fair auction on the weekly, the daily, and the 240. And this is the cool thing about this is it's real-time quotes going into it, updating every 60 seconds to give you those levels. And I'm going to pull up our landscape view here on the S&Ps, and you can kind of get all this right here. There's the 58, there's the 47, trading right within there. Had a little bit of noise above the 58.50 area. You could call that rounded off 59. We reached a high of 2060. So I love to pull this thing up. I mean, a lot of people are like, what is this? But it just kind of gives you everything in one snapshot view to pay attention to. And a lot of people out there will give so-called levels, and here's the pivot points for today, blah, blah, blah. But these are very, very well thought out, what we call automatically outputting new profiles. If you haven't watched a lot of our shows or looked at some of the educational videos on our site or TFNN, these are things that are forecasting tools that come out, and they're not like some of the information that I go over sometimes that people put out. It's like, okay, here's a level, here's a level, here's a level. It's almost like they can't be long. There's so many daggone levels that they come out with. These are, for really good short-term leverage points, intermediate term leverage points on the daily, and here's the long term. And we also provide, which nobody else that I know of has done, which is take the time to take all the internals and try to get some functionality out of them, being that we've had breadth positive, and we've had these crossovers from positive to negative, and historically back tested these things. Took a lot of time with this on the intermediate, the long term, the 240s and 60s, and we're breadth positive on all these situations right now. So at this stage, and there's our market bouncing around in that small term fair auction there. At this stage, especially when we had daily breadth turn negative for a while, and that was okay. And if you look back at these in a back testing manner, which we've done, trading crossovers themselves, forget all the inflection points that I'm showing you on the index in particular, but just trading crossovers of breadth positive to breadth negative on the intermediate or the long term, the weekly, the daily and the weekly, respectively. Those are systems in their self. I mean, you're never going to pick tops and bottoms, but those have outperformed the S&P, which has been in a huge bull run, as we know, for what is it, 5 or 6 years now? 5, 6, approaching 6. It's outperformed the S&P 3 times over on the long term. So, and from 2003, it's been ridiculously outperforming, especially in 2008. So as we look at those breadth levels, what it does, and I'm again not trying to beat our chest, but what it does is it hopefully will eliminate one side of the marketplace by either, hey, let's opt out on selling this resistance point and let's try to find some support levels. So right now, since that breadth turned positive on the daily again and the weekly stayed positive, we're trying to, believe it or not, trying to find support levels now. And I know we kind of had some rattling around here around the 2027 area that was a little bit disturbing to me, but that's the way we're looking at this. And on the 240s, right now, real time, taking all that into consideration, we're getting a little bit farther above this area if you were looking at this as resistance. But remember, we're trying to find breadth being positive, trying to look at this as a buying support situation. This was the fair auction. Now we're getting a little bit outside of it as we speak right now. And you got to remember, if you're trading, looking at these as balanced areas to try to rattle around within. And I personally thought this had moved up relatively fast in a short amount of time frame so far, the S&Ps being. And that report was actually, looking at all the numbers, I'm looking at them on TV right now, actually, as we speak, just to kind of get the latest. They're not in line. They're better than what the market was actually hoping for. So that was one of the things that was the 30% chance that would drive this higher at this stage, and that's what we've got. But that being said, you're trading against the odds at this stage to take a long-term stance on the short side based on everything I just talked about on the stock market. So we're going to take a look at the notes and the bonds here again, and we're going to look at the financials, the XLF in just a little bit, and the internals. I'm reading something that I did right now. We're going to look at the XLF and the instruments within, because as we talked about, the bank stocks aren't necessarily enjoying what's being kind of foretold with what's going on with the rates. I mean, they want rates to go a little higher, and I think all those stocks are bracing for that, and that's not happening. Even as the stock market goes up, the notes and the bonds are going up at the same time. And that's, turning the rents the same way, paying attention to that historical relationship over the last couple of years and just sticking with it until we're told differently. So what I want to do here is go into the XLF really quick. And I've got a question. I'm going to answer in just a second. Okay, so the XLF 20. Let's just look at this. 2445 is our daily inflection point on the XLF. So we've kind of sold off a little bit here and come back into the bottom of a fair auction here. We did catch a bid off of this 2370 area on the XLF, if you'll notice that. And again, these things have been in, long-term. Clicking the wrong buttons here this morning. We've been in, above profiles here on the long term, and on the long term, just like the S&P is coming down into 68 the other day, we've got to take a shot there, and we're looking at 2370 for that shot. So we've rallied almost a full point on the XLF here, but we want to take a look at the internals and try to make some sense of it. Sorry, I was trying to read something in the den there. Yeah, I'll try to answer that a little bit about the scanner, Mike. Next segment, but if you want to send me an email, I want to put my email in here in case you guys don't know it. It's actually on the TFNN site under Global Market Pulse area. It's jlogan@tasprofessional.com. Feel free to send me questions. I'll hopefully be able to answer them and clear up any things that aren't clear as we talk about them on the show. JP Morgan, this is obviously one of the big holdings along with Wells Fargo, Berkshire Hathaway, and the XLF. JP Morgan is almost 8% of the value of the XLF. So, how are these things reacting this morning? Here's today's real-time quote. We're at 60.72, so we're up a little bit here. But I guess the reason I'm pulling these up is some of these stocks aren't the best buy situations in the world. As the market breadth is positive, you want to try to find things that are probably going to move higher quicker than other stocks. And on a relative strength scale, and I'm looking at JP Morgan, I don't feel that this is the time to buy this, considering everything that we just spoke of with the rate environment and the situation with the breadth being positive. And there's not a lot of leverage points here. Here's a 240 on JP Morgan. So JP Morgan is something I would opt out on. Let's go into Wells Fargo, and I really do not like this bank. I do not like Wells Fargo. Here's the situation, 5306. We're still above long-term weekly profiles here, but this is a stock that could start underperforming along with the XLF here. Here's the situation, 5346, sitting bottom of the box down here. Yeah, okay. And 5346, considering we've got this 5306 that we've gone below and come back and gotten above. We haven't closed this week above here. Today's Friday. We may close above, and that's relatively bullish on the long term. And we're trading pre-market 5363 sitting right now. So we're up a little bit this morning. These are probably, again, not the best long candidates in the world, even though we've climbed above. We're going to see we're going to have to see how we close here today, because this is getting the kind of the double conviction, trading above weekly unfair highs and daily unfair lows, 5346. So if you're going to look at Wells Fargo as a buy point, you got to wait and see how it's going to close today. But again, I think there's better longs out there. And we're going to take a look at AXP really quick. That is almost 3% of the value of the XLF. We're trading 9166 pre-market here, and again, we had a new fair auction appear, and we're looking at 89.33 and 91.41. So what do you do with this now? We're kind of getting back above this. These are two inflection points that lined up. We're getting back above that area. Again, I'd like to see how these things close today. 90.68. If we have a weekly close above there, that's going to be relatively bullish for this particular stock. Here's what's going on this morning on the 240s. So as we look at some of these internals on the XLF, we're trying to figure out, what's the leaders and what's the dogs here. AXP is actually seemingly, to me, looking a little stronger than some of the other stocks that we looked at. So this will be one of the leaders of this group. USB, US Bank, similar situation, kind of dipped down into that unfair high of 4303, sitting below daily profiles. I think there's probably better candidates in this case also. Let's go back to our notes here to see how that's acting while this report has been unwinding. Daily unfair highs 128.15 seemingly have held here. Let's just take a look at the S&Ps. This is our 10-year. We're kind of rattling around here. This is again the 240, 2058. We're trading 2057 right now. So again, we may rattle around up here. Again, the breadth is positive. We're going to have to see how a lot of these stocks open up. I don't see that changing a lot. We've been up a lot in the last 36 hours actually. Let's just take a measure there. 60 down. About 80 S&Ps has been the north range here in the last 36 hours. So you would think that we'd take a little bit of a resting point here, and we may do that, but I don't think we're going to be in a situation where we're going to sell off too hard here, even if that happens. And again, you're trading against the odds, trying to take a big stance on the short side at this stage, looking at the internals of the market itself. Let's take a look at the DAX and see how that's reacting. New range for the DAX, 97.28, and unfair highs at 99.58.50. We're right in the middle of a fair auction there, but we've gotten back above the weekly. So again, targets on the upside right now, 99.58.50, and you've got support down here between 97.50 and 97.28.50. So again, the DAX, I think we're kind of sitting in no man's land up there right now. You got to just sit tight when it comes to trading the DAX. Yep, I'll take a look at coffee in just a second here. I want to take a look at one more XLS stock, and then I'll get into that after the break, if that's okay. I want to look at Goldman Sachs. We haven't had any super ripe opportunities on the XLF yet as we've been looking at them. And Goldman Sachs, you got some resistance, 192.68 in my opinion. And on the daily, can't get this to come up here. Similar situation to the XLF. I actually like this as a shorting opportunity, Goldman Sachs. And that resistance point, 191.01 up into 192.68 for GS. If you're going to look at some stocks that are going to possibly have some downdrafts if the market does come off, but right now it's not the time to do that because the breadth is positive and you don't have any cooperation with the broad market itself. We're going to take a look at MetLife when we come back, and also we're going to take a look at coffee. We'll be right back, buddy.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Steve Rhodes is doing a big kind of series webinar today, so I'm going to be filling in for him next, and I want to get into a little bit more about the scanner and some of the nomenclature that I use. I talk a lot about inflection points. Just wanted to define some things for you guys. Hopefully clear up some confusion if there is any. The dollar, I've got this up here. Obviously a ancillary beneficiary of what's going on with that report, and we're trading. Oh my God, 92.72. Didn't think I would see that quickly. We talked about this from the 81.5 area being the breakout. My goodness, that thing is climbing. Woo. We talked about not shorting this, kind of eliminating that side of the marketplace. Okay to be long, not okay to be short, and that's based on no new supply areas appearing, and that's our long term. This is our daily. There are 0 reasons to short the dollar. I hope nobody's standing in front of that truck right now. Here's the situation on the 10-year again, just amazingly just resting right up against that inflection point, 128.15. We have been able to back off there a little bit this morning with a little bit of noise, but again, this is an amazing situation that rates continue to drop. And what are we below 2% right now? Is that the equivalent of what's going on here? I think we are. Yeah, let me hit gold really, really quick. Again, this is something we talked about earlier. I'm just looking at this, trying to hang in there with the stops below 1,200 and trading a little light on this at this stage on gold. Okay, we got about 2 minutes left here. Try to cover as much as we can. And here's the euro. I hate to keep beating a dead horse, but this is kind of the gift that keeps on giving. There's been 0 reasons to get long this. There are still 0 reasons to get long the euro. And as you can imagine, with the dollar climbing and the so-called good news in the U.S., the euro is taking that on the chin again. The pound is not actually kind of hanging in there. Again, no new inflection points or no new support levels to really look at this. No demand areas down here on the pound yet appearing on the daily, so we've got really nothing serious to lean on here with the pound. Here's the 240s again. Nothing serious to lean on yet from the long side. It's just not going down. That's kind of like crude oil if you're trading the pound. Here's the situation on the yen. We've caught that inflection point. We talked about waiting patiently until we found support again. 118.20 rounded off. Nothing to really lean on. No leverage on the yen. I'd stay away from that right now until we get into some areas of significance with that particular product. Take a look at the NASDAQ. We didn't cover this today. The levels, so to speak. Here they are. Here's the NASDAQ, and NASDAQ's in a fair auction all the way across the board, as you can see. So we're going to pull this up. Boom. Right at the top of a 240, but still sitting below. Those are the inflection, or excuse me, the levels, if you will. 42.43, NASDAQ 240 unfair high. So let's just take a look at the chart really quick. Here's the daily. New box appeared just like on the S&Ps. You got support down here. Former unfair high around 42.08. And that's the end of the show. I'll be right back. I'm going to cover for Steve today. And I'll be right back in about 5 or 10 minutes.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.